Did you know that most traders use the same position size for every trade, no matter what the market's doing? Here's the truth about that. It's a recipe for disaster. In today's video, I'm going to show you exactly how I adjust my position size and profit targets based on the current market conditions. You'll learn how to maximize your profits when volatility spikes, tighten and protect your account when things are a little bit less exciting. If you want to know how professional traders tailor their strategies to market conditions, stick around. This could be the game changer you've been missing. And who am I? Chris Dover. I'm the founder of pollinatedtrading.com. I'm a professional trader. I've been trading for over 25 years. I day trade, I swing trade, I trade options, I trade crypto, I trade futures, I trade stocks. If it's type of system that is available to trade that works with my stuff, I usually trade it. So what we're going to do here is we're going to dig into, first of all, I'm going to break down the last couple of weeks in the market. And this is timely. It doesn't matter. Like we can look at it today and be like, oh, this is super important for what's going to happen tomorrow. Maybe more so anytime you see this, you can realize, okay, yeah, this actually happened here. I've seen that before. Happens about 70% of the time. Okay, yeah, I'm going to probably do that sort of stuff. So let's get right into my screen. And I'll show you how I break it down step by step to understand where we currently are in the market and which strategies to apply to that current market. Right, ready to go? Cool. This is a daily chart of the S&P 500 futures. Okay, actually, that's fine. What we see, price up here on top. This middle section is the SQN indicator that I'm always talking about. It's free on TradingView. Go find it under my name. It's the one with the most likes, I believe. Works great. All its job is, though, is to just tell you the current market environment, what to expect. Okay, it's not to tell you this is the exact top. Oh crap, this is the exact bottom. Better buy. It is helpful for that because it will put you in places and say this is what is possible in this market environment, this market regime. But more importantly, it kind of eliminates all the other questions you have. For example, right now, this green area we're in, this is a low volatility trending bull market. This is not a major market top. When it turns blue, that's when you have the potential of a major market top happening. So in June, it's when it first turned into that high volatile bull market where a market top was totally doable. And eventually, this is the point I'm trying to make here, eventually it got it. We had about a 10% drawdown on the S&P 500. We had about a 20% drawdown on NASDAQ. So I would consider that very, very timely. But what happened from there? Right back up to the top. And that's the thing that happens if you're constantly optimizing for the worst case scenario in the market, you get hurt. Okay. If you're looking at 1,000 trading days, 30 of them might be a really horrible day. Okay. And so the first thing you may say is, well, what if that day happens tomorrow? Well, look, we are in an environment where that has been wiped out of the market. We've returned to the quiet trending markets that happen over 50% of the time. Just this quiet rise happens 50% of the time. The neutral happens another 30% of the time. This major top happens about 10% of the time. And these little down markets here happen about 10% of the time. So 90% of the time, you're either neutral or rising. Okay. So that's your first thing. Okay. Then we're going to say, okay, great. How do I deal with that? So I have this market regime tool, and I'm going to get into sizing and all of that in a second. It's all relevant to this. Okay. This is all relevant to that. So what we have here is all-time highs, a breakout, and a consolidation at that level in a quiet market regime. Okay. So by having this market regime mapped out, I can go look at other places in history where we've had a similar sort of scenario where we had a pullback, a rally, the breakout, the pullback, and what happened from there. So we can take a look at, well, here it is. We recently had that one in March, it looks like. And there you go, went neutral. It, had its market top here. So we went from 53 down to, 300 points, 300 something points. So like 6-7% pullback, and then right back up to the top, bang around. Jeez, off to the, come on screen, off to the races. So we go from 53 all the way up 57, and then you get back into that position again, that bull volatile, that potential for a major market top. You got your major market top, and here we are back into that. Let's go see what we can find. So this one's actually a lot more interesting to me. The 2021, I guess 2022 high, the end of 2021, the very beginning of 2022, was the previous all-time high in the S&P 500. Okay. And we spent 2 years going down, back up, basically sideways for 2 years. And again, now we can see we had our major market top. So we had a nice rally. And then as the rally gets kind of long in the, I don't know, tooth, whatever the phrase is, as it gets a little extended, we get this volatile area, and that's where we get our pullback. And the pullback lasted for a few months, actually, August through October. It was a summer, fall, rough summer and fall. And a lot of people have recency bias right now because of that. Also, if we look back to the summer, so August through October, again, during the bear market, was rough. So a lot of people are like, have that in their mind right now. Okay, so we hit all-time highs in a neutral, or at neutral basically, but in a bull quiet market regime, we hit all-time highs. So what should happen here is we take off and rally, which it did, and then you got your bull volatile. So you wore off 2 years of sideways. So it went a little bit further than oftentimes. But again, the point of this, the SQN in blue, the whole point of that is to tell you, hey, it's high volatility in your position size, okay? Be prepared. Be prepared with lower position size. And then you get the break. And then again, as we talked about, wears it off, back up to new all-time highs, bangs around, takes off. Here's where we are right now, down from all-time highs, comes back into it, breaks out, wears it out. And then most likely what we see from here is the continuation of that trend. Okay. So in this market regime, this is the bull quiet market regime. It trends, the market tends to trend higher, and mean reversion trading, dip buying is available. You can, we are in a bit of a, like in a shorter time frame now. Let's take a look here. For the last couple of weeks, we've been in this sideways channel, okay, where dips could be bought and you could actually short the rips, okay? So now we're going to go and take that to a lower time frame. So let me take this down to a 5-minute. And so what I did here, I've already prepped this chart, but let me just start over for you. Okay. So on this chart, this is a 5-minute chart, regular trading hours of the S&P 500 futures. Okay. This was today. Today's trade was a bit of a gap up and kind of up, sideways up, and then kind of continued higher into the day. We had 2 trades. I had 2 trades. Should have been a third. I didn't get the early because I tend to skip the first part of the day, at least for day trading. Algorithmically, that all is handled on my server. Okay. So in this environment, from that, well, okay, so you can see we had that sell-off, bang around, rip to the top, another gap, and then we went to this all-time high. And since it looks like the 18th or 19th of September, it has just been in a sideways range. that is about 580 down to 500, 5,700, 5,800. So about 100-point S&P 500 range. Okay. So that's the part I'm going to measure, because each day it became more and more obvious that we were stuck in this range. There's nothing special about me that I figured that out. I just want to make it clear here. You can look at this big daily chart here, and so there's our area right there. You can just say that we have pretty much 5,800 down to 5,725 or so. That's pretty much been the range that has been most respected. You had this little bit of a gap in the middle of all that, but it appears that whatever happened, that previous swing high is now support. So previous all-time highs is where support keeps getting bought. Okay. I don't know if that's super significant or not to everything we're talking about. But right now, like this level, it could be. But what I'm going to do is get down into this stuff and take a look, say, okay, how am I going to trade it? So one little trick I like to do is I like to use volume profile. Let me turn off the session volume profile. Okay, so now it's just a plain chart with a couple of, just take that one off because we're not talking about that trade yet, or today. We're talking about today's trading. I'm going to add, go to technicals, go to profiles. I don't know what version I have to make this happen. You may not have the version of trading view for it, but this is how I do it. So I go to indicators, technicals, and then I go to fixed range volume profile. And what that does is that gives me a way to just draw the range that I want to see. Okay. So it's going to give me a volume profile of that range. Okay. Row size is ticks. Let's do number of rows. Let's do like 100. Okay. That's a little bit better. Okay. Next, we have the value area high, which is this solid white line up here. Value area low, which is that solid white line there. And then the point of control. I'll explain what all this means. So within this range, you can see that the volume profile, this histogram on the side, means that there were contracts traded all the way up here and all the way down here within this fixed range of period that we have. Okay. Now, what it does is it goes and gets 70%. Where's the 70% of that traded? That's called the normal distribution. You've seen a number line where it starts on the left, goes up in the middle, and then comes back on the right, the mid curve, the whole thing, blah, blah, blah. The most volume that is traded in this entire period of time is going to be this dotted line in the middle. That's called the point of control. That means that if you wanted to see the exact point where the most amount of volume happened, which means probably there's stops around that area, there could be take profits. There's orders, a lot of orders, and a lot of people, when you move away from that area, are going to either be in profit or going to be in loss. Okay, so it's kind of why the mean reversion trading works so well, because we see where all the action happens. Okay, so again, this is a 5-minute chart. So we're looking on 2 to 3 week, coming up on the 3rd week of this sideways consolidation. Notice how we've had some spikes above and some spikes below that were extreme, but everything's just sitting in the middle. Nothing too fancy about that. Yesterday, it looks like was actually, I did not do that. Let's go to here. Yeah. The September 19th that I kept talking about. Okay, here we are. Now it looks a little bit better. Okay, so now we're going back to multiple days. This is about 2 to 3 weeks of trading. And yes, there were some spikes that went below our level here. There were some spikes that went above our levels there. But where did the volume trade? It traded in the middle here. And since it is not a trending market in this area that we're looking at right now, that tells us that, okay, if you want high probability trades until proven otherwise, you buy them down in this area and you sell them into the middle, you short from up here and you cover in the middle. That's generally how I would look at this entire period. Okay. Now to take it down to a intraday period. So let me turn this 10. We'll just take it off. Okay, so I'll actually just write down draw a line on the levels here so we have them. But they're actually, it's pretty obvious to see where the levels are. And then I'll just draw the point of control here too. Okay. So I'm just going to close that off because it's a lot of confusion on the screen. So the range here is 57.51 to 57. So a 40-point range is actually the real range that you're looking at, even though you went from 58.28 down to like 57.24. So, 100 plus points is the range. It's only 50 points or so, 45 points or so, that the real high volume part of this is happening. So what we're going to do is we're going to want to be putting trades on up near the top of that range and then off the bottom, the middle here, or buying from the bottom into the top. So first things first, the first thing we're looking at here is this gap yesterday. We also had a really good one last week. Okay. So our systems catch these gaps really well. This one was this was like a 10R trade. We bought the close, sold the open with some options, and we had a massive winner. So algorithmically, when I say I don't trade the open, my algorithms are doing that for me. So on the close, algorithm bought this over here somewhere, and then on the open, sold it. This one did not work out too well on for me, the way I trade my options. Some folks do broken wing butterflies or straddles, or like multiple strategies, or just buy the straight up stock or the futures. I personally just use regular calls, really low delta, so that when we do have a big move, I have a outlier move, and then on the regular moves, it kind of loses money or breaks even at best. That's not what we're talking about. That is less useful, happens only a couple of times in this sideways market that we're looking at, right? But when it's trending, here, let's get that big picture up again. When we're in an actual trend, you can see gaps, a lot of gaps. And that's how one way we trade the trend really, really well. So in this sideways market, I'm going to go to today. So my job as a trader is to identify what type of trading day it is as early in the trading day as I possibly can and make a trade based on it. Okay. So this morning, my location, 6:30 is the open, 6:30 a.m. So I didn't get back to the trading desk until about 8. So hung out with my son, took him to school, kind of like did all those things. And then I got home and we had a trade, a mean reversion trade. Again, look at our range. Here's our range. Okay. We're at the top of the range and the curvy setup happened. Okay. So now I'm going to go ahead and throw my curvy on there, and the curvy trade setup was ideal. Okay. At this point in time in the day, we had already moved about 100%. Notice in the right-hand corner over here, I have this panel. So it's the ADR, average daily range, the last 25 days. What's our current, what was our current daily range? Like where did we end today? what's the difference to hitting your average? So we're 14 full round points above the average of 100%. And so at this point in time in the day, we were actually at right around 100% of our average daily range. Think about this. That's looking back 25 days. So in the last 25 days, we're the average that we've been at, and we're at that top range of the volume profile. So for me, you can, well, and it doesn't take a whole lot to look. You see these big wicks up here. That means price went up and then selling came in. Price goes up, selling comes in. So it's probably profit taking and short sellers, traders. So this is actually very, very key. As a trader, I'm working, 5, 10, 20 ES contracts, right? I'm not working 5,000, 10,000, 1,000 contracts at a time, because I'm trading on a lower time frame. If I'm trying to move 1,000 or, well, also I don't have that money, duh. But if I'm trying to move 5,000 contracts, you can't do it on a 5-minute period. You can't just be like, oh, I'm going to short at, short 5,000 at 57.94. Like, it's all that's going to happen is this is just going to start. The tape's just going to go woo and deal with it, right? Unless it's a big time frame or a big money trading day. So on a small money trading day, things like this are going to happen. It's going to go up to that little level. It's going to fade it pretty quickly, because this is a known level. If I drew that on my chart, I'm not the only one that knows that this area, that's the top of the range. My also these bands are right here, showing me. So everybody, like ATRs, standard deviations, volume profile, there's a number of different ways that are going to be telling us, yep, this is the area that is probably going to have profit taking if it's day traders, people like us. So day traders, when I say day traders or low time frame traders, we're also low money traders, in that we're not moving, hundreds of millions of dollars in a period. That's higher time frame. You can't move that size of capital really quickly in these markets. And so you have knowledge, even though we had a gap and it went higher all the way up into it here, even though that all happened, the first thing a lot of people would say is, oh, this is going to be a trend day. This is going to be a really strong day because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So 12, 13, I don't know, 12, anywhere from 2/3 to a quarter of, or 3/4 of the 5-minute bars were up bars in that first hour and a half, right? So a lot, or 2.5 hours, I guess. So a lot of people are thinking to themselves, strong up day, but and you don't know until you get to a place that tells you, actually, no. So we gapped up into the middle. We sold off yesterday down to the bottom and found support. It broke it for sure, but notice that we had support. So this I will cover in a second, because that was an actually interesting transition. So today, low time frame means we got the clue here. Day traders are going to do it. So I put a short on, a curvy short, set it up, and boom, 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 boom. It ultimately went a total of like 1.65 R, and then stopped. Okay. Now, again, let me look at my corner. This is where it gets interesting. So the ATR tells me that I want to be looking for 2R profit targets. If this ATR was like 8, then I would be looking at 4R profit targets, or, trail type things. But because it's so low, and I'll show you what I mean, like you can see the ATR, this is the ATR, the average true range, the average of the last 14 or 21, whatever period range. You can see that it is all the way down in here. So that little ATR tool, in the corner tells me where to start looking to take profits. So I knew the ATR was low already. What was it here? When I got in on the trade and it started moving, it got down to at lowest 3.5 or so. Notice how as price drops, it rises because it's a low volatility drop and it's representing the previous period. So this is just telling me, okay, Chris, there's no hero trading here. You, statistically speaking, over a course of 1,000 trades in this market regime, in this system, the curvy system that we're talking about, the curvy trading system, in the S&P 500, when the ATR is here, you take profits, okay? When the ATR, now notice over here, so we take this short, and it goes down to that level, and I don't actually get my 2R profit target, and at 1.5, I'm thinking, I'm moving it to break even. And then all of a sudden I got the next setup. So I actually walked away with 0.68. So let's document this. Okay, first trade plus 0.68R, and then second trade. Okay. So I haven't done that one yet. So we're in this trade. It tells me to go to 2R profit target, maybe even trail stop, just to make sure I keep some profits of it. I ended up getting 3/4, 2/3 of a R on that. So not that great, but it was actually lucky, because what do we know in the bull quiet market regime? We want to buy dips more than we short the rips. So I was a little bit more hesitant normally in these type of things. And then now what happened? Got my setup again, and look where the setup happened. So let me just turn these off real quick. Okay. Where did my setup happen? This is the point of control for that last 2 to 3 week period. The most amount of volume was traded at this level. So if I was the smartest trader in hindsight, I would have just took profits right here. But I waited and wanted to see if we got a setup. I got a setup. I got a curvy setup. I got long, which I closed out over here. I reversed and went long. And it took me up to, again, my profit target, 2R. Ultimately, this thing went to a full 3R, which my ATR tool did not tell me to take. Not yet, at least. It's not to be precise. It's not meant to be precise. It's meant to just kind of get you into the large. So if you've got 1,000 trades in this market regime with those ATR levels, I'm looking for the best outcome on average, not the absolute single perfect best outcome, but the most average outcome. So the profits, or the trade goes down to here, stops. And again, we get these wicks. So it's like, why is it? Because there's a bunch of trades happening here. And from there, it took off, and we actually went up 123% on the trading day. So we added another 20% or so volume or range on the day. Wasn't a full, wasn't fully indicative of big money coming into the market, but it was interesting to see that move happened. Okay. So yeah, when I took profits over here, I was, first of all, it says 2R, and I'm looking at all these wicks and everything just doing nothing in here. And I'm like, so what did I do? Move my stop up to break even, and I start looking for a potential to get out. But at that point in time, we had already pushed above the high of the day, and we've pushed past our average daily range. So I was like, I'll put my stop here. I'm not going to enter any more trades late in the day. I got two. Worst case scenario, I get stopped out at 1R. I walk away with 1.6 on the day or something like that. But eventually it did push up to my full 2R. So on the second trade, that was okay. So nice, easy day for me. 2 trades, well within it. let's take a look at yesterday, because doing the same sort of thing, okay? Same sort of analysis. We open up right smack dab in the middle. So the first part of the day tells me nothing. There's no trades to be had. We're all just kind of sitting there. But then it starts, this area keeps getting bought up, and it just kind of hovers right there at the point of control. Nothing exciting. And then keeps going down to this area and finding a bounce, finding a bounce, finding a bounce. And then that happens. It just comes in and just goes wonk in one big bar, closes, and then breaks. Okay. So yesterday was outside a little bit of the daily range. Let's measure what our daily range was yesterday. Not too much outside the daily range. So ADR 66 today. Average daily range is 66. Yeah, it was actually inside yesterday. Yesterday was actually an average range day. So once it broke, that all it really did is it went to almost the extent of its average range. And then once it got there, it stopped. So here we go. Let's take a look. This is the bottom of our, month-long range here, or so, back into here. This is the bottom part of that, on that volume profile we pulled up. This is the middle of it, the point of control. And then this is the point of control is not the middle. Point of control is where the most amount of volume has traded, the absolute most amount. And that has traded at 57.70. So yesterday opens at the point of control, and then it goes to an edge. Once it gets to the edge, then that's when you start looking at, okay, let's deal with what we have here. This would have been a buy. Now, my algorithm bought it. I did not. Okay. The swing algorithm came in, bought this, sold this. Okay. Bought at the low, sold at the middle. Me, day trading during regular trading hours, sold at the top, covered in the middle, and then somehow was lucky enough to catch. Not really. I mean, I just used the strategy. I just traded the strategy, and it took me up to where we're doing. So that's basically how I use ATR to know when I'm looking to take multiple positions. So ATR of 8 over here, I think I'm going for a 4R. So let's take a look at what we got. Down, down, okay. So the trade entry here. Okay. My stops at the lows. Where would I be selling this thing? Up right in there at the 4R or so area. Where is the 4R or so area on this one? Right at the point of, right above the point of control, right near the top of the range. Right. So when we're down here, notice how the ATR is high, and it's this up here yesterday would have been telling me 4R, not 2R. So if whenever I look at that and it says like 3R, 2R, 4R, whatever it tells me, that's how I size my position, because, or that, not size my position. That's how I look to take profits. Where am I looking to take profits? And it turned out to be pretty doggone accurate right there. Here, this one was there as well. So that would have been a short. And let's take a look. Short position here. You're kind of like, what? Yeah. Okay. Here we are. Here's our entry. There's our stop. And so you're in up at the high, right at the open of the day. And then, yeah, right down into 4 takes us to, ta-da. Where does it take us to? The bottom of the range. This is like witchcraft, isn't it? So understanding the volatility that we're currently in, using ATR to take profits, wherever we take profits, is going to give us the, put us at the ideal location. Okay. If you were to put this trade on and this thing, and let's say your entry was here and your stop was like really tight, and this thing says 4, you're out right here. But what the kind of cool thing is then you can look at it and say, but wait, we need to get to, at minimum, I want to get to the point of control. So what's the R on that? 10. What about going to the top of the range? What's the R on that? Where is top of the range? Oh no, I was in at the point of control. What am I saying? So yeah, 10R. Like sometimes it works. Sometimes you can just look at it and say to yourself, oh, I'm going to actually go a little further if you got your position sizing done well. Okay, cool. The Curvy system, pollinatretrading.com/curvy. If you want to trade this system, this is by far the best trading system I've ever built, I've ever used, because it's built to trade this sideways markets. When we find ourselves in places where the average daily range is 150, 200%, the Curvy system doesn't work. So you just don't trade that. Go trade crude oil, go trade gold, go trade corn. You don't have to trade S&P. This is a 3.0 version of Curvy, which you get if you grab the Curvy system, which uses the volume profile and multiple days to break it down. By far the best. This is what I use to, anytime we do those prop tryouts at the prop firms that are not real prop firms. This is the sort of system because it keeps you from going into your max daily drawdown and then your max trailing drawdown and then your max drawdown that they lock you in. Any prop firm, actually, even whether we're talking about like a tryout prop firm or like a real funded prop firm, they have risk management in place. So that's regardless of what level you're going to. If you're going to a really high level, they're going to have risk management. So it's really important to understand what the risk management is. Adjust your system accordingly. If you know that you have the potential of 8 consecutive losses and your max drawdown is $5,000, well, okay, how much does 8 go into 5,000? And that tells you, and then give yourself, margin of error, of course, but that tells you how to size your position, what an R value is. 8, 7, 6, $600 or so gets you 4,800. So, maybe put a $500 R value on a day like today. 2R is $1,000. 2.6 is like, what is that? 6.3. So like $1,400 day if you're running a $5,000 drawdown type of strategy. So that's how you use all that. And I know that using my ATR profit target, I know that I'm going to be getting out as where I can, not where I have to. If that makes sense. All right. That's all I got today. Hopefully you guys got something good out of it. Put some comments down below. Ask me some questions. Go get the Curvy system, because if you're having troubles day trading, this is the sort of thing that you can really take yourself up to the next level. Love you guys. Bye.